discussed yesterday, Cheryl, that if the Sensex crosses the 54,500 mark, we could be looking at the Sensex coming back to almost 800 to 1,000 points further from those levels. So now the next level of targets for Sensex should be in line of 55,500 on
Kunal, you were saying, please, can you complete your sentence?
Yeah, so I was saying that 54,500 was the previous resistance. We were moving in a 1,000 point band. Now that the Sensex has scaled past about the 54,500, we could be looking at 1,000 points on the upside further from those levels. So the next level of upside, which I would probably expect on Sensex, would be somewhere closer to 55,500 on the spot levels.
That's certainly something to watch for and something that will cheer the bulls that are listening in. Let's start with the query segment, and in fact quite a few of you have already asked questions. We'll be coming to that in just a bit. For those of you who are tuning in for the first time, here's how you do this. You send us a message on any one of our social media platforms or on the WhatsApp number. Tell us your name, the stock that you'd like to know about. If you bought, tell us what level you bought it at and how long you'd like to hold it for. The first question I'm taking today is from Samir. We've got Samir asking about Dodla Dairy, and this one's for you, Rajesh. On the fundamentals, would you suggest a fresh entry into this counter?
Say avoid this because there are a lot of dairy companies, although doing well, but doing nothing on the market cap front. So it's better to avoid these stocks and be in a good quality names.
All right. Moving on, this one is coming from Hemanta Datta. Balrampur Chini is a counter that he's purchased about at a price of around 359 rupees per share. 20 shares is what he's purchased. He wants a short-term target, and also he's asking whether it's time to average it right now for the next 2 to 3 months horizon. What's your take on this one, Kunal? Balrampur Chini?
Yeah, you can look to average at current levels, and I would just to hold on. My potential target for Balrampur Chini, assuming this rally continues for, say, at least another 6 months, I would probably be looking at the stock hitting back towards the 450 mark for itself. So that could be a potential target for the stock.
Okay, so Balrampur Chini is what you just answered. We've got a query from Mr. Ghosh, and he wanted to know about that, so that should answer it. But he's also asking about Praj Industries, Kunal. What's the view on Praj on the charts?
I would say it's a slight better chart than Balrampur Chini. Again, bullish on this stock as well. In fact, Balrampur Chini and Praj Industries have been one of my favorites, two of my favorites from the entire sugar/ethanol play over the last 3 to 4 years. For Praj Industries, I would place a target range closer to 440 over the next 1 to 3 months.
Okay, this one is from Arvind, and Dilip Bitcoin is a counter that he's purchased at a price of 443 rupees per share. He's saying that it is showing a positive movement today, and he wants to know whether he should use this opportunity to average the counter. He's planning to hold it for the next 1 to 2 years. What's your take on this one, Kunal?
Well, I would suggest to average and to hold on.
Okay, we've got several near-term questions, but I'm going to take a slightly longer-term question. We've got Raja from Chandigarh who's asking what stocks can be bought to have a long-term, so he says long-term leverage diversified equity portfolio. I do not know what that means. I hope you've not taken debt to buy the stocks that you have bought. But having said that, for a diversified portfolio from the medium-term perspective, what kind of stocks would you recommend, Rajesh, to buy based on fundamentals right now?
See, depending on one's risk appetite, one can go either or a long, large caps or a mid cap. So let me suggest 3-4 names from each of them. In the large cap space, obviously Reliance would be our first choice, Larsen second, ITC third, and HDFC Bank fourth. HDFC or SBI, any one of them. And in the mid-cap space, we would suggest EID Perry. You can go for LG Brothers, FIM Industries, and I would say Grasim, if you like, or Jindal Steel and Power. These are some of the stocks which we are very bullish in for the next 3 to 4 years horizon.
All That's a list of stocks that actually Rajesh has provided for our viewers. I hope you've jotted it down. Reliance, L&T, ITC, HDFC Bank, SBI, EID Parry, Grasim, JSPL are some of the names that Rajesh spoke about right now. Kunal, coming to you, this one is coming in from Varun. And he's looking to buy Pidilite for at least 3 years. He wants to know, but at what level should he look to enter this particular counter?
I think current levels are good. Stock is trading at, I think, 2300 or slightly below. Larger phases of correction. So whatever phase of correction you get, I think it's an opportunity to buy Pidilite. You can start at current levels.
I believe I got Raja's question wrong. I believe this one is for you, Kunal. I'm going to read it out as it is so that you can gauge it. He says, I hold a long-term leveraged diversified equity portfolio. Please advise some stocks where medium-term short positions can be created from a fundamental as well as a technical view, which can act as a hedge against my portfolio. What would your answer be?
So I think if you're looking to execute some short positions to balance your portfolio, I'm not sure whether you've tried. So ideally, the best way to hedge the portfolio is if you are holding a lot of stocks, is to look at index. Now, depending on what kind of stocks you've already bought. So, for example, if you're buying private sector banks, and if you're buying, say, for example, ICICI Bank and the top 2 or 3 performers from the banking names, ICICI Bank and Kotak 2 months, then you can look at shorting the underperformers in the sector. So probably an IndusInd Bank or maybe an Axis Bank, they could be good shorts. So you have to do this exercise for the sectors which you have built positions. So I can't be very individualistic and detailed about the answer, but then I think that's the approach which largely you can look out for. If you're not looking to short the index as a best hedging tool, then you can look at shorting the weaker stocks from the respective sectors.
Moving on, this one is coming in from Ramachandran, and this one is for you, Rajesh. He's saying he's holding some shares of Amrutanjan. He wants a view for 4 to 5 years, and also he wants to know, does it make sense to staple with the counter? And if yes, then should he add some more also at these levels? What's your take on this one, Rajesh? Do you track this counter, Amrutanjan?
See, we are very bullish on Amritanjan. It's a very good pay, good brand. I would say, although the product profile is very small, it's 1 or 2 products are there, but the brand is very strong. The numbers have been good, and we are very bullish on that. Adding at this point of time would not be suggested. Any correction, maybe 10-15% from the current market price would be a good entry point, provided you want to be there for a longer period of time, maybe 2 years, 3 years down the line. But it's a good stock to hold on a portfolio in a mid-cap segment.
Coming back to you on BPCL, we've got Tonia from Kerala who's writing in, asking about the counter bought at levels of 400, so slightly elevated levels. I believe this was acquired about a year back. Planning to hold for another 3 years, and 500 shares have been bought. What's the view? Rajesh, this one's for you. BPCL bought at levels of 400, slightly elevated levels, can hold for 3 years. What's the view?
See, one can continue to hold. One, the numbers have been bad due to different reasons of crude prices, but once crude settles down, these companies are going to do well. 2, they dole out good dividends. 3, if you look at the number, they have got 3 refineries, more than 16,000 petrol pumps, around 6,000 gas vending stations. So these are very positive. If you look at intrinsic value, it's trading at a very huge discounts to its intrinsic value. The divestment thing has been put on back burner. That's the issue. The stock has seen some correction, but the valuations are very attractive. One can hold for a long-term horizon, even add to one's portfolio if somebody is willing to.
Okay, this one is from Jaya Krishnan, and he's writing to us from Kerala. Has a Shobha purchased at 850 rupees per share. What should the viewer do, Kunal? Hold, sell or average? And if average, then at what levels? If sell, then which is the other counter that the viewer should look at instead of Sobha?
I think you should definitely look to hold Sobha Developers. I think it's an emerging stock from the real estate pack. It's done reasonably well. It has a good price history for itself, at least over the last 2 to 3 years. And prior to that as well, the stock had been showing some good phases of returns for itself. The fact that Shobha has corrected from 1000 towards 600, 650 levels also makes it very attractive. So I think at current levels is a good level where I would suggest you can look to buy, or any dips which comes along the way, say something that of 10% approximately as a corrective phase could be another averaging opportunity for Shobha.
All right. We've got Anand who is asking about Paytm, and this one's for you, Rajesh. Bought at levels of 1272 per share. 50 shares have been bought. View is for a medium to long term. What should the strategy be?
Exit at any given opportunity. We have been bearish on this since its listing date, and we still maintain our stance that it's an exit on every opportunity. You have to book losses, that's unfortunate, but there are no choices. The numbers have been pretty bad. Competition is tough. Onboarding of client itself is a tough game, and retaining them is another issue. So it's no point sticking to these kind of companies. And moreover, with the kind of scenario we are witnessing right now, infusing of funds in the new age companies would be a real tough job. Numbers have been pretty bad. I don't think there is any point in sticking that stock. Exit.
Right, that's the take coming in on fundamental side for Paytm. But Kunal, I have a query on Paytm from Shiva Bharat. And he's saying that he's purchased Paytm at 600 rupees per share. He wants to know whether he should book profits or wait for 800.
Well, I would be of a belief that you should definitely look to hold Paytm. I think the stock has very recently given a big breakout for itself, at least over the last 2 to 3 months of chart patterns, and historically resulted into at least 15% kind of an uptick. So at 720-30 levels, Paytm, I would suggest a hold on for at least a near-term target.
Term target? Kunal, we missed that. What was the near-term?
Alex, can you repeat the question?
Yeah, we missed that. We missed the target. What was the near-term target on Paytm?
800 is the target which I would eye on Paytm.
Okay. I'm coming back to you on Hiranba Industries. Sunny is asking this question. Bought at levels of 800. He's holding 110 shares. What should the strategy be, Kunal?
I think it's a recently listed name, not recently, but then it has just about 1.5 to extrapolate on long-term basis. But the medium-term charts for Hiranba are quite okay. The stock is still getting into a drag kind of a mode, but I think at current levels of 585, it's a good buy and sort of a hold from current levels.
This one is from Hardeep Singh, and this one is for you, Rajesh. Trident is a counter that he's purchased about 2,000 shares at a price of 52 rupees per share. He's saying that he can continue to hold on to this particular counter right up till 2025. Do you think he should do that? Makes sense? It's worth it?
See, textile stocks has seen some kind of drubbing in the last 2-3 months, I would say, but they are now showing some kind of relief. And this should be taken as an opportunity to switch to better names. I think Vardhaman Textiles would be a better stock, or even Welspun, which is in the same sector as Trident on the tower segment, and that has got better fundamentals. So I would say, given an opportunity, switch to either Welspun or Vardhaman Textiles.
Coming back to you, Rajesh, on this one, we've got Kumar from Tirupur who's asking this question. He's already holding Infi, Larsen & Toubro, Bajaj Auto, Airtel, Asian Paints and ITC. He's looking at 1 or 2 mid-cap names to invest in, and he's asking for suggestions. Or is he he's saying, is it better to stay with these large-cap names and wait for a bit?
See, all the large-cap names which the gentleman holds are very good, and we have a buy call in almost all of them, as discussed some time back also. And as far as mid-cap names are concerned, I would say if somebody wants to invest in mid-cap, one can have a look at auto and solid space, which is the in thing, not because of EV, but because of auto numbers are going to be good in the near future, and we are very bullish on this sector. Some of the names I would like to suggest is FIM Industries, LG Weathers, or a GNXL. In sugar space, one can have a look at EAD Perry or Andhra Sugar. In FMCG, one can have a look at Marico. So these are some of the names which I would suggest one can switch to.
This one is coming from Matthew. Matthew is writing to us from Muscat, and he's saying that he has 250 shares of Mass Financial Services purchased at 672 rupees per share. Kunal, he wants to know whether he should hold, average or exit. He's saying that he can hold on to the counter for the next 1 year.
Cheryl, I think there was a technical glitch. Can you repeat the question? Name of the stock?
It is Mass Financial Services, MAS Financial Services. The buy price is 672, 250 shares is what Matthew holds.
Well, I believe short-term buys the stock has formed a base, but it's not an attractive chart from a long-term play. So I would suggest that you can probably hold on to it, say, for the next couple of months. If the stock comes closer to your cost price, which is around the 700 mark, good point where you can look to exit.
Coming back to you on windless biotech, we've got Vivek, who's bought at levels of 245 and looking to hold for a period of 3 to 4 months, asking whether he should average his buy price at this juncture.
Alex, apologies, I don't track the stock.
Okay, fair enough. Would you have a view, Rajesh, on this counter?
Which company you said?
We're talking about windless biotech.
No, we don't. I'm sorry, we don't track this.
Cheryl?
All right, this one is coming in from Vaibhav. He has DV's Laboratories, 20 shares purchased at 3,840 rupees per share. Kunal, he wants to know whether he should look to accumulate some more at current rate and what sort of target should he aim for DV's Laboratories for the next 6 months.
See, I think Divis is a phenomenal stock which is to be held on from a long-term play. Now, I understand that the stock is also going, getting into a lot of short-term concerns, for itself. Over the last 2-3 months, we've seen some sharp selling for DV slab. Generally, and this is from the historical, times. I think 2016 also the stock had faced a similar correction. It remained sideways for at least 3 months, 3 to 4 months, and then is where the stock had started to pick up pace. So I believe we should not be in a hurry. Let the stock consolidate. I would be of the belief that possibly over the next 1 to 2 months, DV slab can even come below the 3,500 mark for itself. So if you're looking to average, below 3,500 mark could be a very good averaging opportunity rather than at current levels.
Okay, Rajesh, I'm going to attempt to ask you this question. If you have a view, do share. We've got Subbi Reddy, who's asking whether he should acquire 1,000 shares of Trident Limited. What's the view?
Trident?
Yes.
One should go for Welspun, I would say, rather than going for Trident. They both are in the same towel industry. Welspun has gone for an expansion. They have good European markets. They have tied up with new retail chains, and the valuations have corrected to very smartly, I would say, from 140, 50 levels to 70 levels. The valuations have become very attractive. So rather than going for Trident, one can try Welspun Industries.
This one is from Mukil, and Mukil is writing to us from Bangalore. And Kunal, he purchased Poonawalla Finance today itself at a price of around 273 rupees per share. 1,000 shares is what he's purchased. He wants a short-term target for this counter.
So I think it's a good stock, but pricing-wise, I am not sure that whether you bought at the right price of Poonawalla Finance, because the stock had actually given a breakout 2 days back when it had managed to break about the 260 mark for itself. So 273 is where I believe could probably be a point where short-term traders may try and take out profits. So I would suggest is that let the stock consolidate for a couple of days. It may try and come back towards that 263 mark, 264 mark, which is the breakout point. That's where you can look to average. And post that, short-term wise, I would probably expect targets of at least 278 at max for Poonawalla Finance.
All right, Vasudeva's got this next question in two very different counters. But Rajesh, for you on the fundamentals, Castrol as well as First Source Solutions. Would you prefer one of the two or both of them from a long-term perspective?
What was the other one other than Castrol?
Solutions.
Excuse me, Alex.
Yeah, it's First Source Solutions.
Okay. Both are good companies. Castrol is a laggard. It doesn't move at all, but fundamentals are very good. It's trading at a huge discount to its intrinsic value. Third, it gives out good dividend. Fourth, the brand is number one in lubricants, and if crude corrects, I would say if crude corrects in near future, these companies are not going to reduce the prices they have taken a hike on. So that would be an alpha margin for these kind of companies, whether it is Castrol or Gulf Oil or something of that sort. So Castrol would be my first choice. First Source also is a very good company in the BPO space, doing very well. The prices have seen correction. The group, Sanjeev Goenka Group, is very good. I think both of them can be added to one's portfolio.
All right, let's move on and let's take this query coming in from Hari, and he is writing to us from Abu Dhabi, and he's holding 14 shares of Tasty Bites purchased at 13,100 rupees per share. Kunal wants a view on this counter. How is it looking on the charts, Tasty Bites?
Well, I believe it's at a very attractive level for itself. Now, I understand that the stock has corrected almost 50%, if not or slightly more than 50% over the last 10-12 months of the price pattern for itself. But then from 20,000, the stock is now at 12,000 levels. Looks very attractive to me on the chart. So what I would suggest is that if you have a longish term kind of a time horizon, you should definitely look to hold on to the stock.
That's true. All right. So Suresh Dave from Mumbai is asking about Adani Wilmar and whether it can be bought at the current juncture for the next 3 years. So this is, of course, in the context of higher commodity prices and all of that. But Rajesh, what's the view on this counter?
See, for long term, it's a good buy, I would say. It has seen some kind of correction in the recent past from 800 odd rupees to 600 odd rupees because of various reasons. One, the commodity prices were high. Two, it was moved to ASM category and all these things. But for a longer term horizon, it can be a good buy. The brand is very good. Fortune is one of the leading brands in the edible oil, I would say. They have taken a price cut yesterday from 5 rupees to in the range of 5 rupees to 30 rupees on different varieties. But for a longer term horizon, I think for edible oil category, this is a very good buy. One can buy at these levels for a target of probably 800 in the next 12 to 18 months.
All right, just for viewers who are thinking that the show has been pre-recorded and being played, no, that's not the case. So we are taking queries live as we get them. But yes, there are a lot of queries that are piling in, so we need to adhere to all the viewers' queries and reply to those who've been actually posting much earlier than you have posted. So please do bear with us, but we will be taking most of your queries. So let me get going with the next query that I have. And this one is coming from Neha, and Neha has 134 shares of HUL, which she's purchased at 2,386 rupees per share. She wants to reduce her exposure to the stock and move funds partially elsewhere. Is that the right approach? And what sort of a target that she can expect over the next 3 months? Kunal, HUL is all set to report its Q1 numbers later today. But nevertheless, what's your view on this one? Do you think that it makes sense for Neha to go ahead and reduce her exposure in this counter?
So yes, today is the results for HUL, and I'm not sure what the results outcome would be, but my sense is that the stock probably should try and stay buoyant at this 2500, 2550 mark. But then the second part of, rather the first part of the question was also very intriguing, and I would agree to it that you should try and reduce your exposure to HUL, even though the stock has performed very well over the last 1 month, rallied up from 2100 to 2500, 2550, where it's currently trading. So I think in that regard, it makes a lot of sense to switch out from HUL at current levels and then look out for banking names or the financial services pocket. I think there are a lot of opportunities from these two spaces particularly, which I believe could probably do very well for themselves over the next 1 to 3 months, even if the market remains a lot more sideways over the next 1 to 3 months. So you should definitely make that switch from HUL towards slightly higher rate sensitive space banking, specifically the PSU banking names like Canara Bank and SBI is what you can pick up from current levels. And from the financials, you can look at either Bajaj Finance or Shriram Transport as two better bets.
In case anybody else is wondering if this is recorded, it is currently 11:41 a.m. Rajeshwari from Chennai is asking about State Bank of India, which she has bought at levels of 475, asking whether she can book profits and exit at the current level. Kunal, what's the view?
I would suggest to probably, I think you can look to book out profits over here. The stock is getting into a bit of a sideways kind of a zone for itself. So I think it makes sense to book out profits. But then, as I said, that switch on to, or rather switch off to some other interesting rate sensitive names and the ones which are moving on high price action for themselves. So, something like Canara Bank is what you can look out for as a much better alternative from a medium to long-term play.
All right, this one is coming from Shailaja, and she's asking Kunal whether she can buy Muthoot Finance and ICICI Prudential at current price for the short term, either ICICI Pru or Muthoot Finance. Your views?
See, Muthoot Finance, I believe, looks attractive because the stock is confirming signs of multiple bottom formations over here. So, 1020, 30s, where the previous close have been formed for Muthoot Finance. And I think it looks very attractive at those kind of territories. ICICI Pru, insurance names, I'm not too much keen into this space from a short-term play because these stocks, they typically rarely find momentum for themselves. So the chart patterns on a long-term basis may look very attractive, but from a momentum play, I would avoid the insurance space particularly.
All right, it is time now to start the rapid fire segment. Gentlemen, you know what that means. So I'm just going to kick start the rapid fire with a question on Birla Soft. We've got Shriya from Kerala who's bought at levels of 329 from the perspective of 1 year. Rajesh, should she hold on?
Yes, one can hold on. The company is doing very well. One can continue. The price is also corrected.
Okay, so Darshan wants to know, Kunal, whether he should enter Bharat Forge at afresh at current levels.
Hold on, possibly let the stock correct by another 5%, come back to say 625 levels. That's a good point.
Kunal, Everest Industries 527 is the buy price. Would you suggest booking profit or hold?
I would suggest to book out profits over here.
All right, Shivji has 2,000 shares of RBL Bank purchased at 140 rupees per share. Should he hold or sell? What's your take on this one, Rajesh?
At this point of time, it's a hold. Maybe another 15-20% up move would be possible in the near future.
Rajesh, Metropolis is the name of the counter. We've got Prashant Manapure who's writing in from Pune. 45% loss, exit or hold?
It's an ad from our side at this point of time. The valuations have corrected heavily and it's looking attractive.
Okay, Jignesh has bought NIIT Tech at a price of 220 rupees per share. Kunal, he wants to know what should he do with this counter because he's seeing a fall in the stock price.
Well, I would suggest to hold on to it and do a slightly longer term kind of thing.
Shrinu from Vijayawada wants to know about Federal Bank. Bought at levels of 97. Where should I book profit is the question. Kunal, what's the view?
So I think we had a similar query yesterday, mentioned 104 as a target for Federal Bank. It was also one of the calls we had given yesterday. So 104 could be a point.
All right, Kishore has a query on IndusInd Bank. He's purchased 400 shares at 1,700. Should he average or sell? What's your take on this? What's your take on this one, Rajesh?
Switch to Kotak Mahindra Bank. That's on a better footing. Valuations are good. So book profit in this. Switch the money to Kotak.
All right, and unfortunately that brings us to the end of this edition of the query segment. Rajesh as well as Kunal, thank you so much for taking the time. Always a pleasure speaking with you, and I'm sure that a lot of viewers have benefited from the answers that you gave today. We have to slip into a very quick break on this note, but do stay tuned. We've got more on the other side.
It's the weekend.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white.